Hello, this is Brad Harvey. Welcome to our Ask the Advisor video series, where we answer your financial questions. Hello, this is Brad Harvey. Welcome to Ask the Advisor video series. Today's question that we're going to answer is, how do I know if I'm paying too much for my investments? We get this question a lot at Harvey Investment Management, and it's a little bit more difficult to discern than you might think. However, it's extremely important to understand that the costs that you pay for those investments, while very important and certainly necessary, it's even more important for you to know what it is that you're paying and what you are getting for that money. Typically, those costs fall into two different categories. We have one which is just pure investment cost, which can be commissions, it can be internal costs for the investments like mutual fund internal expense ratios or annuity mortality and expense fees and underlying portfolio maintenance fees and custody fees. And then we also have advisory fees. Advisory fees typically are based on a percentage of the assets under management. Those are typically charged on an annual basis in terms of percentages, like 1%, but then charged quarterly. So you might pay 1/4% every 3 months based on the value. However, if your portfolio is invested in annuities or mutual funds or ETFs on top of that, there will be other internal costs for those instruments, and those can vary widely in the industry. It's also important to understand that a lot of these underlying investments will have trading costs of their own, which are passed on to the end consumer. So be very, very careful about what it is that you own inside the portfolios. Frequently, mutual funds can be purchased on an institutional share class basis, which is going to be inexpensive and typically not have any loads or commissions to buy or sell. Sometimes you'll see annuities that have surrender penalty periods. Those typically have higher internal costs. Sometimes those can be as high as 2, 3, or 4% per year. You might have advisory fees on top of that. So keep in mind when you're looking at your investment costs, those costs are going to erode your performance over time. They are certainly a necessary part of the process, especially if you're looking for advice and guidance and fiduciary oversight. That costs money. However, sometimes owning ETFs can be a whole lot less expensive than owning a comparable mutual fund that might have the same investment strategy and holdings. So, be diligent about understanding the fees and costs of what you are paying in your portfolios and what you're getting for that money. This is Brad Harvey. Thank you. Thanks for visiting our channel. We hope you found the information valuable. If you want to see more videos about investing, please click to subscribe. If you have any questions you'd like for us to answer, send us an email at him@riagroups.com. We would love your feedback.